Good morning. You've tuned into ET Now. This is Buy Now, Sell Now. I'm Karunya Rao. With me is Varun Hiramat. Let's start off the show by taking a look at the top newsmakers and the top headlines of this hour. First up, Nifty above 13,700. That's the big update as far as D Street goes. You have Pharma, PSU banks, which are leading the up move. However, metals seem to have lost the sheen a tad bit. Domestic equities look robust. Markets continue at fresh record highs. Sensex also nears 47,000 as we speak. 46,800 is where it's right now perched at.
Right, and talking about stocks that are actually leading the up move today, we have IndusInd Bank making a very strong comeback. It's now at its highest point since March, while it does have a long way to go from the top it had made earlier. But promoters have been given a 1-month extension by the RBI to subscribe to warrants that are issued at 1,700 rupees. The fact that they've been given an extension for a month means, at least to many investors and brokerages, that there must be serious intent on behalf of the management to convert. So keep your eyes out on that one. Massive volumes today and definitely trending upwards in trade.
Meanwhile, we got a mega exclusive right here on ET Now this morning. TCS spoke to us earlier today. They talked about cloud transformation being not a sugar rush, and demand is here to stay. There's opportunity for double-digit growth that exists as the management of TCS saying that the momentum is strong going into the next year.
Right, and some good news also coming in for fintech firms that have long been in the lurch. The AMC doors are finally open. SEBI has eased the norms for fintech firms to launch their own AMCs within their platforms. So we're talking about companies like Grow would also benefit from something like this. So that space definitely in focus today as well.
Meanwhile, you have a fair amount of attention being paid to the cryptocurrency space. Bitcoin has surged, and how? It has crossed that $20,000 for the first time ever, an important milestone to watch out for.
Right, and finally, as far as headlines are concerned, a biryani venture, India's largest pizza, Jubilant Food has launched its own biryani restaurant business as well, called Ekdum. And obviously, we all know how big a brand Domino's is here in India and how widespread that distribution is. It seems that that same network might now be used to sell biryanis, which is one of India's most popular fast foods. So Jubilant Foods in focus on the back of that as well.
Right, before we proceed further with the show, we just want to flag off the BNSN quiz for the day once again for all the participants and all the viewers out there who would like to take part and send us their answers. Today we asked which material companies has performed the best in FY21 so far. You have options: A, Green Panel, B, Green Ply, C, Kajaria, and D, Century Ply. So if you have the answer, then please feel free to log on to Twitter, follow us on ET Now Live, send us your answers in the comments section. We will unveil the answer at 11:45 later on the show. Meanwhile, markets definitely have inched up from the lackluster beginning that we saw at about an hour and a half ago. You have Nifty Bank up 0.3%. Financial Services Index is looking up as well in trade. Definitely the day belongs to pharma and media names. You have Nifty Pharma and the media index both gaining more than 1%. Nifty Realty continues its winning ways today. It's up about almost 1% in trade. Let's talk about individual gainers. You have Divi's Labs leading the rally on the benchmark index, up over 3%. HDFC continues to do fairly well, right now up 2% as we speak. The likes of IndusInd Bank, which Varun also flagged off in the headlines, up more than 2%. Shree Cement, Power Grid, DRL, Ultratech Cement, Bajaj Finance and HDFC Life also among the top gainers. Varun.
Right, the market's still having its fair share of gainers, despite the fact that there now is some commentary coming in that the rally has gotten quite extensive. Good to see that we still have select stocks that are really powering through. And on that note, let's bring up the BNSN stock cloud for this morning. 10 stocks that are fairly active for various reasons. Obviously, beginning with IndusInd Bank. We'll be talking more about that later in detail and giving you some numbers as to how everything's panning out. But that stock's seeing some big volume buying today. We have Deviz Labs, which has crossed the 1 lakh crore mark today, a hallmark for that stock. The first time it's done so, 1 trillion rupees. We then have CSB Bank, which has seen some very interesting buying of late from Nomura, Singapore, lapping up shares. We then have Jubilant Food, which is using its master distribution network to market biryanis now, and that's going to be a product by them, Ekdum, so keep your eyes out for that. We have Motherson Sumi, whose credit rating has been revised to stable. Navin Fluorine, which has announced a 200 crore capex for some key molecules. Deepak Nitrite, which made a fresh lifetime high today above 917 rupees, still playing catch up to Aarti with similar margins and better return ratios. We then have a Snowman Logistics that's going to be doing a fundraise, and then we have a Power Grid in there as well. That's the stock cloud for you this morning. But it's also a very important week for the markets, and particularly a very important day tomorrow, December the 18th, because it's the Sensex rejig and FTSE rebalancing. And it's going to host a lot of flows coming into select companies. There's a list of them. My colleague Vivek is now going to walk us through the fine print.
Well, a couple of key important triggers on December 18. Number one, you're going to see a rejig as far as the Sensex is concerned. You would be seeing Dr. Reddy getting included into the Sensex at the expense of Tata Steel. So on the basis of that, analysts are estimating a $78 million inflow as far as Dr. Reddy is concerned, while on the other hand, Tata Steel could estimated see an outflow of close to $60 million. But very importantly, and that is something that we've been highlighting all along, ever since NSDL and CDSL approved the increase of Indian equities FOL, the foreign ownership limit, to the respective sectoral limits, both FTSE as well as MSCI took this into account. While MSCI took this into account and implemented the change at one particular instance itself, or at one shot, FTSE said that it would be implementing this particular change in FOL in 4 subsequent quarters and divided the inflows into 4 quarters. The first tranche was done in September 2020. December 18, you will see the second tranche of inflows, given the fact that the FOL has been increased. India is all set to see maximum inflows in the Asia-Pacific region in the December 18 rejig, and you would be estimated seeing close to 750 million to 900 million worth of inflows on the back of this particular rejig. Now, some of the stocks that are most likely going to see a weight increase and therefore inflows coming in due to the FTSE rebal. Number one would be L&T, Asian Paints, TCS, Tata Steel, Bajaj Finance, M&M. All of these stocks would be on the radar on the back of inflows, on the back of weight increases due to FTSE taking into account the increased FOL limit.
All right, Vivek. Thanks for that. Ashish Kapoor and Kunal both are ready. Let's bring them on board to talk more about stocks, markets, and viewer queries. Kunal, coming first to you for your high risk, low risk ideas. Both belong to the media universe. Talk to us about how you're sort of betting on these names, because the media index and many of the names have run up a fair bit in the last 1 week. Do you think there's more steam?
So good morning, Karunya. I strongly believe that the media stocks and the media space is here to buzz quite a lot. We've seen some good recovery coming out into names like Sun TV, Z, the mid cap names as well. But I strongly believe that many of these media stocks, they are due for a stronger breakout on the upside. So we've seen a start of a move for these stocks, but I believe on the longer term charts, especially on the monthly, quarterly, and the yearly time frame charts, there are some very strong evident breakouts for these names. So what we've seen in the last 1 month for the media names, I think could probably be just a starter, kind of a rally, and these stocks should see some substantial upside. So I've picked up 2 names. This category, first one is a buy in Sun TV for a potential target of 550, expecting the stock to move significantly higher from current levels, given the fact that it's found momentum, and it's been one of the leader stocks in the media space as well in this leg of rally. So targets of 550, stop loss could be kept at 495. The second would be a buy on Z Entertainment as well. I think there was this big resistance for Z over the last 5-6 months at the 225 230 hurdle. Now this has been the hurdle zone has been crossed yesterday and today. Also the stock is trying to make a strong clawback above those resistance marks. So I believe a consistent attempt towards a breakout could lead to a very strong uptick for this stock as well. So I would suggest a buy on Z Entertainment. A potential positional target of 275 and stop loss could be kept at approximately at 210.
Kunal, quite bullish on Z Entertainment. Ashish, hi, good morning. What are you shopping for today?
Well, I think the market is fairly high in terms of valuation, but yes, certain stock-specific ideas are still doing well and likely to do well on the back of very good fund flows. So on the safer side, I think pharma is a space where you can safely buy even today. And Lupin is one share within the pharma space that has been underperforming. The underperforming performance is quite surprising given the fact that Lupin otherwise is doing well, is the leader in many of the segments in which it operates and has been improving its market share. Given the growth in the business and given the fact that going ahead, the US generics market would also give it a lot of earnings growth. I think this is a very safe stock to buy. The management is also guiding for an improvement in ROE from 7 to 8% to about mid-teens in the next few years. So given all that, I think the re-rating is on the cards in this counter and fairly safe because it hasn't run up the way some other pharma counters have run up. So a very safe bet to buy in these markets, and we have a target here of 1150, which is a significant upside from the current market levels. For the aggressive investors, I agree with my counterpart on the technical side that media looks pretty interesting, and the stock which I have in Mindus TV 18 broadcast, I think the company has turned around very well in the last few quarters. The Q2 growth in the net profit was very amazing. The company saw an EBITDA margin also go up by 56%. The ad revenue growth is also fairly consistent now and backed by a very strong group Reliance. I think this stock can give you very good returns. Here we have a target of 55, which is a very significant upside from the current level. So these are the two ideas. Besides that, you could also look at Delta. Delta Corp looks very interesting. Stock is witnessing good buying interest coming lately. The company had a fair bit of bad news on the back of GST ruling on its core business of casinos. But a lot of that has got now amended. The latest ruling kind of gives us hope that finally this issue will get resolved. And the casinos are also back in business. I think once the COVID situation normalizes, this company would see a very significant turnaround. And with the GST worries getting over hopefully very soon, we could see this stock go up all the way to its previous highs. And I think at around 170 where it is trading now, it represents a very good buying opportunity, and the upside could be as high as 250. So these are the three stock ideas which I have.
All right. Request you both to stay on with us. We'll address the viewer queries on the other side of the break to our viewers as well. Please stay tuned for more updates on ET Now. Welcome back. You're still watching Buy Now, Sell Now. We have Kunal as well as Ashish waiting by to help us with our viewer queries. Let's get on to it then. First up is an email from Ashwin Menon from New Delhi. Wants to ask, is it a good time to buy small cap pharma names like Laurus Labs? He also has a follow-up. He has Shilpa Medicare shares which he bought at 550 levels, asking whether he should continue to stay invested there. Kunal, coming to you first. Laurus Lab for one, and any other small cap pharma names that look attractive right now, and if you could also share your view on Shilpa.
So I'll start off with Shilpa Medicare. The stock price in the last 2 months has corrected from, I think, 600, 610 to a 470. So it's almost gone through like a 20, 25, 22% kind of a correction in the last 2 months. But the chart patterns overall are looking quite strong. So I think from a longer term basis, it's still a stock which has done pretty well for itself. March recovery from the March close as well, the stock has done reasonably well. So it's a stock which I think is consolidating. You could probably hold on if you bought at higher levels, assumingly. Then I think this could be a good time where you would look to average and tend to bring down your cost further on Shilpa Medicare. Coming to your larger theme question that whether it's a good time to add on to or start buying the small cap pharma names, I for one believe that particularly there has to be a diversification, a theme and a method which has to be set for your portfolio. If you're looking to allocate money on the pharma pack, don't look at just investing on the small cap names. Yes, these stocks have run up 4x, 5x, for example, Laurus Labs, etc. in the last 7-8 months. But missing out on the large cap names on the pharma pack could be a big drawback to the portfolio. I believe that you should try and proportionate your portfolio, balance your portfolio in the large cap and mid caps. I would expect the names like Dr. Reddy, Divi's Lab, maybe a Cipla, Glenmark Pharma. These names could do pretty well for themselves over the long term. And if that happens, then of course the small cap rally would keep on continuing even from current levels. So I would suggest that have a proportionate buying into these names. Yes, Laurus Labs looks attractive from a longer term view. Many of these other names like Newland Labs as well, they look attractive. So yes, these stocks are looking attractive from the small cap and the tier to mid cap names. But then don't have just all your investments into the small cap basket. If you already have large cap names, then yes, you can add these small cap names. If you're just starting fresh, then I believe diversified appropriately.
All right, thanks for that, Kunal. What about you, Ashish? What's your view on some of these pharma stocks, particularly, obviously, Laurus and Shilpa?
Laurus Labs certainly has been doing very well. The company looks very promising. Both the formulations business here as well as the US generics businesses are doing very well. So a lot of APIs lined up also by the company. So I think here the outlook is certainly very positive. The stock has run up. So yes, one can be a little cautious while buying more. Maybe use any downsides to try and buy more. But certainly a buy from my side. The company has been doing very well, very encouraging results and very good guidance going forward. Regarding Shilpa Medicare, I think I would perhaps be more cautious with this one because very recently the US FDA has issued a lot of strictures against their manufacturing facility at Mahbubnagar. So generally what we have seen is once the company comes on the radar of US FDA investigators, a lot of more negative news could spill out and a lot of things could get derailed for some time. So you could still stay invested. Company has a good, decent track record of growth, but do not buy more at this stage. Wait for things to get more clear on the US FDA front before putting more money into this counter. So Laurus Labs, yes, certainly a buy on every decline, but Shilpa Medicare would at best be a hold, but do not add more till the clarity on the US FDA emerges.
Okay, great, Ashish. Thanks. Some really prudent advice coming there on those two pharma companies. I hope your query was addressed, Ashwin. Let's now move on. Ashok Leyland, this one's featured quite a bit recently. A lot of viewers writing to us about their interest in Ashok Leyland. This one's from Rajat Jain of Ahmedabad, and he'd like to know the prospects of Ashok Leyland post 100 rupee level. So, I mean, and then he's asking if he should buy at the current market price or perhaps wait for a dip. So, Kunal, when you look at the Ashok Leyland chart, do you think there's large incremental upside left above 100 rupees, or is it now going to be a more slowly consolidating kind of stock?
So let's talk about the space first. I am extremely bullish on the auto pack. I think from a longer term view, many of these auto stocks, they have shown some very solid and strong signals of breakouts, and we've typically and technically seen that whenever auto stocks generally states the first leg of rally, it's generally led into a multi-year upside in these names. So yes, the broader theme for auto stocks looks attractive. Now talking particularly for Ashok Leyland, in the last I think 8-9 years, the stock has been going through a rising channel pattern. So technically, I think it's a stock which has done pretty well for itself. On the long-term basis, yes, the correction in the last 3 years for Ashok Leyland from those 160, 165 levels to a point when the stock had come back to even a 50 kind of a 50, 55 kind of a level as well. Yes, the correction it's been very sharp, but the recovery is also getting into line for Ashok Leyland. It's not the leader of the stock in price performance category as well. So you have to understand that one important aspect, that it's possible that the leaders may move first and then the laggards may try and play a catch up. Ashok Leyland stock price is trying to do that, at least looking at the last 6 months of relative performance. But I believe the prospects for the stock looks extremely attractive. The 8-year channel pattern which I'm talking about, if that pattern continues for Ashok Leyland, assumingly if that happens for the next couple of years, then it's possible that the stock may break back above its all-time high levels of those 160 plus levels as well. So I maintain the bullish stance on Ashok Leyland on the auto space, particularly Ashok Leyland. If the trend continues, then possibility of even a 150, 160 breakout could be possible. But you have to be very, very patient enough into this stock, especially from a long-term view.
Okay, all right. Ashish, what is your view on Ashok Leyland now that finally some sequential improvement, sustained sequential improvement is being witnessed in the CV space, and there are several analysts and experts talking about bottoming out of the down cycle. Do you think it's a good idea to buy more right now?
Yeah, I certainly think so. I think, firstly, yes, the auto space in general and the CVs in particular have really surprised the market with the way kind of growth they have seen, the kind of traction seen over the last few months. Given the kind of negative commentary we were getting in the earlier part of the year, this has been a very positive surprise, the way this sector has rebounded. Ashok Leyland in particular has been doing very well. I think I don't see any reason to worry. I think the stock would continue to outperform. Going forward, we could expect further positive triggers. There is a scrappage policy which has been waiting for approval for I think more than 4 years now. The indications are that at some point, hopefully in not too distant a future, that will get cleared. Once that gets cleared, it will be a very definite positive trigger for the CV space. So I think certainly stay invested. There is, according to me, far more room on the upside and limited downside risk. So Ashok Leyland is certainly a good investment idea. Use any dips to buy into this.
All right. Thank you so much, gentlemen, for joining us then, Ashish and Kunal, and helping our viewers out as always. Slipping into a break here. More updates on the other side. Stay tuned.
Hi, welcome back to ET Now, and you're watching Buy Now, Sell Now. Let's take a look at what Morgan Stanley has to say about the Indian banking sector. They recently put out some guidance. They particularly like the large private banks, right? And they believe, and I quote from this report, that they're entering a golden age of banking. So there's two reasons why they like the private banks more than the PSUs. One is the higher revenue and market share. We all know private banks really lead PSUs, whether it be on the deposit franchise front or on the credit dispersal front. This is, of course, barring SBI, which is the largest bank. They also believe that the lower credit cost, so that's a major trigger. Private banks have managed to contain their credit cost much better, unfortunately, than their PSU peers. So those are the two main reasons. They then went on to talk about the increased digital adoption across the Indian banking system. And basically what they're flagging off is that there should be a very significant decline in operating costs for a lot of the Indian banks as they go more and more digital. So that's what they had to say. They say they prefer SBI over mid-sized PSUs if you must look at PSUs at all, but otherwise stick with the larger privates. So that was MS on the Indian banking sector, private and PSU. We also have IndusInd Bank, which is in focus today, on the back of the fact that the promoters are going to be exercising warrants, it seems. So the tenure for their warrant subscription has been extended by another month. The date now stands on the 4th of February, FY21. So that leaves us about a month and a half from now. What's interesting is these warrants were issued at the time of the Bharat Financial acquisition to make sure that the promoter holding did not drop below 15%. They were also issued at a significantly higher price of 1,700 rupees per share. So today, IndusInd Bank is seeing some big volume buying post this note coming out from Morgan Stanley saying that if the promoters are to subscribe to the balance 75% of the warrants, so the warrants were for 2,700 crore, around 600 to 700 crore was paid up, 2,000 crore is what's pending. If that comes in at 1,700 crores, it'll be a major vote of confidence that the promoters themselves are very confident of the future prospects of IndusInd Bank. And that is why people think RBI has provided an extension, because the promoters are indeed committed to subscribing and finishing that issue off at that desired price. So keep your eyes out on this one. If that is to happen, it might be a major trigger on this stock. And if you look at the buying today, post this announcement coming out, it definitely indicates that many brokerages and investors on the street do buy into that theory.
All right. Thanks, Varun, for all the details about what's happening in Yes Bank, in IndusInd Bank, what the updates have been so far. But let's shift gears and talk about the consumption space. You have Jubilant FoodWorks flying in trade. They've just announced their foray into the world of biryani. Vinny joins us right now to talk to us more about this business foray that they've made. What is it that they're looking at, and what should the investors look forward to?
Not just pizzas anymore for Jubilant FoodWorks as it forays into the biryani categories in the Indian food service market. So Jubilant FoodWorks has entered into the biryani space under its brand name Ekdum, and under the Ekdum brand they are starting 3 restaurants in Gurgaon that will be operational for delivery, takeaways and dine-in. Also they are further planning to open more restaurants in NCR in the next few months as well. Now biryani has been one of the most ordered food in India on food aggregator apps according to certain reports. So that is very interesting, and Jubilant FoodWorks seems to be capturing that market. The operations will be offering wide varieties of biryanis across the country, and the price point also seems quite attractive. It's only ₹99 is what it is starting price of the biryani is at. Now the management did say that this is obviously in line with the strategy for portfolio expansion which the company has been planning, as well as they see a strong potential also in this segment, and they're very confident of the segment doing well under the Ekdum brand. So a very good entry coming in from for Jubilant FoodWorks. Now over the last couple of months or so, we have seen that Jubilant FoodWorks has forayed into the food service company in different categories. They did have the Chinese dining on Hong's Kitchens. Then they also did have, in the last couple of months during the lockdown period especially, they did come up with in-home cooking items, the ready-to-cook meals as well. So they are falling into other categories, not just pizzas, and ready to cook gravies, pasta market is what they, under Chef Boss brand, is what they did during the lockdown period. Hong's Kitchen has been here for the last couple of years as well. So obviously this is an expansion coming in the portfolio under the food service market, and diversifying their portfolio from home deliveries, dine-in, takeaways under the Ekdum brand as well as other brands, and this is a very interesting foray coming in for Jubilant FoodWorks.
Okay, thanks for that, Vinny. Obviously, very exciting to hear that Jubilant Foods is looking at biryani as a product category, so keep your eye out on that stock. But let's switch gears away from QSR. It's been in the limelight lately. Back to IT, which is an old favorite. And double-digit growth is very much possible, says TCS CEO and MD Rajesh Gopinathan, also insisting that the momentum in the IT sector is strong going into the next year and is far from over. Here's a slice of that exclusive interaction.
I think there was a significant element of catch-up going on in Q2 and hopefully for the next few quarters. But I'll be happy to be back on a double-digit growth trajectory. And I think the opportunity exists for that. And as we look forward into next year, definitely the momentum is there. And as we look beyond, as I said, there are enough positive elements around the entire industry ecosystem that should allow us to continue on that trajectory.
So I'm not trying to put words in your mouth. I don't want to get this one wrong, Rajesh. If I say that double-digit growth for the Indian IT sector is not a distinct dream, it is achievable, will I be right?
I think so, Nikunj. It's definitely a real and achievable target and something that we are 100% going for.
All right, that was, of course, the head of TCS talking about some very interesting developments. But let's talk about something SEBI's done today, which is particularly interesting. SEBI said sponsors that don't meet profitability criteria can still apply for mutual fund licenses. This move is going to help fintech companies that are looking to enter the mutual fund industry to seek a mutual fund license. So who's eligible? A fintech company that has 100 crore net worth in the mutual fund business and has also recorded profitability for 5 years, right? It was before this, it was, so this is a relaxation that's been made. Before this relaxation was made, it would have been difficult for fintechs to get into the fund management business. SEBI regulations had prior required both the profitability track record of a sponsor and a minimum net worth of 50 crore. So that's the amendment that's been made, and it is going to favor the landscape for a lot of fintech companies going forward. But on that note, I also think it's time for a quick break on Buy Now, Sell Now. Stay tuned. We'll be back in just a minute.